This conference will now be recorded.
Hello everyone. So in this video, we are going to discuss upon how we should report last year differences in current year annual return. So friends, I am going to divide this video into two parts regarding first part regarding differences in outward supplies and second part regarding differences in input tax credit claim. So the first step which I am going to do is I am going to find out the amount of outward supplies which I have reported through my 3B. So in my this entire video, previous year is FY 17-18, current year is FY 18-19, and subsequent year is FY 19-20. So in current year FY 18-19, I have disclosed my outward tax liability of rupees 23 lakhs through my 12 months 3B. Out of these 23 lakhs, I have disclosed 5 lakhs in respect of last year's transactions which were skipped by me to be reported in last year. And also there were credit notes of 2 lakhs which were not claimed or which were not reported. So after removing the impacts of last year transactions, the net outward tax liability reported by me for FY 18-19 is 20 lakh rupees. So this is my first step. I am going to identify what is the actual tax liability reported by me through GSTR 3B. It is not going to be direct 23 lakhs, but after adjustments of last year tax paid less reversal in respect of last year outward supply transaction. After these two adjustments, we are going to derive at this amount. Now we are going to look into various situations which can arise. The first situation is the most basic situation, that is I have exactly reported all the outward supplies and there is no difference. So as we see over here, just a minute, the outward tax liability is 20 lakhs in situation 1, and in A3 we saw that the outward tax liability reported in 3B is also 20 lakhs. So there is no difference between outward tax liability as per my audited books and outward tax liability reported in 3B. There is no question of reversal or reporting in next year. In this case, while filing GSTR 9, I will disclose this entire 20 lakh rupees in table 4. Table 4 is supplies during the financial year. Now table 10 and table 11 are going to be nil. Table 10 deals with supplies reported through amendments in next financial year, that is FY 19-20, and supplies reversed through 3B of next financial year, that is FY 19-20, is dealt with table 11. So I have not reported nor reversed any supplies in FY 19-20. Hence, I am going to fill those two tables as nil. Now friends, very important part while filing annual return is whether there is any additional tax liability payable because which is declared through annual return. So there are three stages. Stage 1 is our 3B, stage 2 is annual return, and stage 3 is audit report. Whatever is the difference in annual return and audit report will be reported in GSTR 9C. Whatever is the difference in outward tax liability reported in 3B and GSTR 9 is to be paid through DRC 03, selecting column as annual return. So it is important we have a proper reconciliation statement so that we do not skip or miss this amount. So as per for reconciliation statement, one is tax payable in table 9. In our previous videos, we have discussed that while filing annual return, table 9 is always going to be equal to outward tax liability as per table 4. So that amount is going to come from B4. Tax paid as per table 9, we have also discussed this, that this amount is auto populated and cannot be changed. This amount is equal to tax paid as per 3B, and here the figure we are going to consider is going to be tax paid through ITC plus tax paid through cash. So that amount is going to be 23 lakh in all our situations. Now difference over here is 3 lakhs, but does it mean that 3 lakh rupees is refund receivable by me? No. There are two adjustments to be done while to find out the actual tax payable, and those adjustments are in respect of last year, that is FY 17-18 transactions which are reported in 18-19. So I have paid tax of rupees 5 lakhs through 3B of 18-19 and reverse tax of rupees 2 lakhs through 3B of 18-19 for 17-18 transactions. So after these adjustments, my net difference comes to 0, and hence there is no additional tax liability reported by me through GST annual return, and hence no tax to be paid through DRC 03. Now, in next situation, we are going to take my actual outward tax liability was 21 lakhs as per audited financial statements. So friends, over here, what I have reported in 3B is 20 lakhs. So the difference in 2 is 1 lakh. Situation 2 and situation 4 are same. The minor difference in both of them are, in situation 2, I have reported this additional 1 lakh through GSTR 3B of FY 19-20. I have already paid tax on the same. In situation 4, I have not yet discharged my additional tax liability of rupees 1 lakh through GSTR 3B of FY 19-20. So in situation 2, I will disclose rupees 20 lakhs in table 4 and rupees 1 lakhs in table 10. Table 10 deals with supplies declared through amendments in next year, that is FY 19-20. Hence, 1 lakh will be reported in table 10 and 20 lakhs will be reported in table 4. It is very important that we should not report 21 lakhs in table 4. Otherwise, in reconciliation of table 9, we will get additional tax payable rupees 1 lakh, which should not be the case because we have already paid the same. But in situation 4, as we have not paid the tax yet, we have not declared this outward tax liability of 1 lakh through GSTR 3B of FY 19-20, table 10 will be nil. Hence, I have to declare entire 21 lakhs in table 4, and hence, while doing reconciliation in table 9, my tax payable is 21 lakhs, tax paid 23 lakhs, out of which 3 lakhs is for FY 17-18, that is tax paid for FY 18-19 is 20 lakhs, and hence there is an additional tax liability of 1 lakh which is arising through GST annual return and will be paid through DRC 03. So friends, we have analyzed two situations wherein my actual tax liability is greater. Now we will analyze situation 3 and situation 5 wherein my actual tax liability is less than what I have reported in reported through GSTR 3B. So as per my audited financial statements, my actual outward tax liability for FY 18-19 is 18 lakh rupees versus I have reported 20 lakhs in respect of FY 18-19 transactions in GSTR 3B of FY 18-19. Now, in this case situation 3, I have already reversed rupees 2 lakhs through FY 19-20 3B. Hence, rupees 2 lakhs will be disclosed in table 11, and I will disclose rupees 20 lakhs as per table 4. Our aim is my summation of table 4 plus table 10 minus table 11 should always be equal to my actual outward tax liability for FY 18-19. That is the thumb rule we follow. So in situation 3, it is 20 lakhs minus 2 lakhs, that is 18 lakhs. Now when we come to reconciliation in table 9, tax payable is 20 lakhs, tax paid is 23 lakhs, out of which rupees 5 lakh less 2 lakhs, that is rupees 3 lakhs, is paid in respect of 17-18 transactions. So net tax paid for FY 18-19 transactions is 20 lakhs, which tallies as which tax payable as per table 9, and there is no additional tax payable. Friends, over here you would see that I have given the same treatment in situation 5 also. The reason is, here I have assumed that in case situation 3 I have reversed in next year, and in situation 5 though I have not reversed in next year, I will reverse the same in my current month 3B. Alternative solution in situation 5 can be to report 18 lakhs through table 4. Then in my reconciliation of table 9, there will be a difference of 2 lakhs negative, that is a refund of rupees 2 lakhs. Refund of 2 lakhs cannot be claimed through GSTR 9 annual return, and we would have to file a separate refund application. There is a gray area in this case, and we have two options how we should proceed. Now friends, in situation 6 and situation 7, here I have taken a case where I have partially reported or partially reversed my differences. So most of our cases are going to be in situation 6 and situation 7, because these earlier situations are kind of theoretical situations. So in situation 6, my actual tax liability is 23 lakhs against 20 lakhs reported. There is a difference of 3 lakhs, out of which I have paid tax on 1,60,000 through GSTR 3B. Hence, I will disclose 1,60,000 in table 10. And as I want my total to be 23 lakhs, remaining 1,40,000 will be reported in table 4. That is, net reported in table 4 is going to be 21,40,000 as against payment of 20 lakhs. Hence reconciliation in table 9 will have tax payable of 1,40,000, which I will pay through DRC 03. And in situation 7, my actual tax liability is 17 lakhs only. Out of the reversal of 3 lakhs, I have reversed 1,73,000 only. So now in this case, remaining 1,27,000, though I have not reversed, I will show I have reversed in next year, that is in FY 19-20, in table 11 of GSTR 9 of FY 18-19, and I will reverse in current month and show 20 lakhs in table 4 as against 20 lakhs reported and no difference. Alternative over here is I will show net and I will claim a refund of 1,27,000 also. So friends, these are all the possible situations which can arise when we are finalizing annual return. Now we will move to second part. In second part, we are going to deal with ITC claimed. So through my GSTR 3B returns, I have claimed ITC of rupees 21 lakhs. But out of 21 lakhs claimed, 3 lakhs is in respect of inward supplies of FY 17-18, which were not claimed earlier and hence claimed in 1819, as it is allowed to claim up to the month of September, or in case of 1718 transactions it was extended also. Also, there were few transactions where I had claimed ITC but they were ineligible due to section 17.5 and I have reversed ITC on them through GSTR 3B of 1890. After identifying these situations, I arise at ITC claimed through 3B in respect of FY 1819 inward supplies, that is 20 lakh rupees. So now on the same lines as outward supplies, we are going to analyze how we should report the difference through these 7 situations. In my first situation, my actual eligible ITC was 20 lakhs only. I have claimed 20 lakhs. There is no difference. There is no question of claiming or reversing in next year. Hence, I will disclose 20 lakhs in table 6, table 13, which deals with ITC availed in respect of previous year transactions, ITC availed in next year in respect of current year transactions, that is ITC availed in FY 1920 in respect of 1819 transactions will be nil, and table 12 which deals with ITC reversed in FY 1920 in respect of FY 1819 transactions will also be nil, and there is no ITC which is lapsed. It is also important to have reconciliation of ITC. Over here, for reconciling, we are going to take ITC claimed as per table 9. So we are not taking entire ITC, but only ITC which only the ITC portion and not ITC plus cash, which was considered for supplies. So when I compare both of them, 21 lakhs versus 20 lakhs, there is a difference of 1 lakh, but it is in respect of FY 1718 transactions. So there is no difference for FY 1819 transactions and hence no tax payable through DRC 03. In situation 2 and 4, my actual ITC eligible. This ITC is after all of my deductions in respect of 17.5, Rule 37, 42, 43. That is 21 lakhs. Now I have claimed 20 lakhs only. So in situation 2, I have already claimed remaining 1 lakhs in next year. Hence I will report it in table 13. But in situation 4, I have not yet claimed the same. So if the last date for claiming ITC has expired, this ITC of rupees 1 lakhs is going to lapse in situation 4. And reconciliation of table 9 will be nil in both the situations. In situation 3 and 5, my actual ITC eligible is 18 lakhs only. There is a difference of 2 lakhs, that is I have excess claimed 2 lakhs. So if I have already reversed the same in FY 1920, I will report it in table 12, and then there will be no additional liability through annual return. In situation 5, I have not yet reversed this excess claimed ITC of 2 lakhs and hence I will report 18 lakhs in table 6, and there will be additional tax payable of rupees 2 lakh through DRC 03 of FY 1819. In situation 6 and 7, we are considering partial. My actual ITC is 23 lakhs, so I have less claimed 3 lakhs, but out of which 1,60,000 is claimed in FY 1923B up to the month of September. So I will report 1,60,000 in table 13, I will report 20 lakhs only in table 6 and 1,40,000 of ITC will be lapsed because I have not claimed the same in time. In situation 7, actual eligible ITC is 17 lakhs. I have excess claimed 3 lakhs, out of which I have only reversed 1,73,000 in table 12. So again over here, I will report 18,73,000 in table 6. How I have arrived to this value is my actual eligible 17 lakhs plus 1,73,000 which is reversed in next year. So I will report 18,73,000 in table 6 as compared to 20 lakh claimed, and there is a difference of 1,27,000 which is difference in ITC claimed as per 3B and as per GSTR 9, and tax payable on same is 1,27,000 to be paid through DRC 03. So friends, with this we have tried to cover each and almost all situations which one will face while filing GST annual return. I hope this video is useful to you and I am been able to enrich your knowledge on GST through the same. Thank you very much. You can subscribe to my YouTube channel and also connect me on LinkedIn. Thank you.